Eric, I think you're muted.
Good day. Well, welcome to Trading with Larry. Larry can't join us today. You're joined by Eric Shamalov and Larry's analyst, Clint Brewer. Good morning, Clint. How are you?
Morning. Good to be on again. We'll figure out
Benedict.
these Larry technical difficulties at some point.
Yeah, I don't know where he is. Where is he? He's somewhere frolicking in some garden in upstate New York or something.
I guess.
Wi-Fi. I don't know how he's trading, but somehow he's trading actually really well recently, despite being a big bear, which I think is a testament to his skills as a trader.
You're
Anytime you're you're able to make money trading, even though your opinion doesn't match what the market is doing, I think is a home run. Um, so how are you, Clint?
good. You'll never guess what he did yesterday.
What did he
Sold
do?
sold a call spread and a put spread.
Oh wow, an iron condor kind of day, right?
If we get him on, you're gonna have to ask him about it. I figure maybe you were you're putting that in his ear, and that's how it came about. But
Yeah, I've been
finally
putting that
got
in
to him.
today. At some point, that's not going to work. Yesterday, we had a little bit uh, of a downside in the market early, then it recovered pretty much unchanged, right? As far as I remember. But yet another day where that iron condor is just working.
Yeah, but we
At
had
some point,
the perfect close.
yeah, at some point that's going to change, right? We're not gonna. It's not going to be that easy to just come in and sell both sides religiously every day. I think at some point that's going to change, but for right now, that seems to be what's going on. And last night we got, I think the market reacted to earnings from Texas Instruments, which I always find interesting because that's like the first tech report. And it's tech, but it's not really tech the way people think about it. Texas Instruments is more industrial tech. Um, So it's not the kind of AI proxy that people are looking for, but the market reacts to it. And what I've always noticed around TXN earnings is like whatever the reaction is, it's going to get reverted pretty quickly. It got reverted quickly last night, but for completely different reasons. It looks like Japan and the U.S. have a trade deal, only 15% tariff rate. Supposedly, they're investing hundreds of billions of dollars into the U.S. I wish Larry was here to yell at me for being bullish on this, but I think it looked good. What do you think?
I think it's easy to spin it good in the headlines as they come across, but here's where I think it's not good. It's bad for out months inflation. Again, come back to that inflation theme. And here, because here's why.
Hmm.
So they make it sound like this 15% tariff, there's going to be now a 15% tariff on Japan. That's part of the deal. Like you read the headlines and they make it sound like that's somehow a step back, a victory, or something. And it is from what was originally threatened. I think the last number I saw, Trump was saying he would put a 25% tariff on Japan starting August 1. So is 15% better than 25? Yeah, but if 15 is what's going into effect, the effective tariff rate on Japan before Trump took office was 2%. So we're going from 2% to 15%. So that's a major step up from what it was. And I would also just kind of steer this back to the current effective tariff rate, not just on Japan, but of the overall imports coming into the U.S. The effective tariff rate right now is just shy of 21%, which is the highest level since 1910. So, and that's before you have all these step up in rates happening August 1. So is 15% on Japan better than 25? Yeah, sure. But it's a hell of a lot higher than what it was before the start of the year. And so I think it's still just kind of this issue of inflation in the back half there, and it's a theme we talk about a lot. But I mean, I think this is just the latest evidence of that you're going to keep seeing that creep in. I I do want to go back to what you said with Texas Instruments really quick. I was just looking at pre-market. So the stock is down 9.5% pre-market. And here's why you should pay attention to Texas Instruments. And you made the point. It's because a lot of their end markets are industrial, automotive. So when it comes to semiconductor names, all the attention goes on Nvidia now. All the attention's on AI use cases, AI applications. Don't lose sight of semiconductor demand as it pertains to industrial applications or automotive, because that can give you some insights into end market trends, with what's happening in those areas. And I've not gone through Texas Instruments numbers specifically, but just what's that stock price reaction here at the open broadcasting about what might be happening in those end markets. I don't know if it was an execution miss on behalf of Texas Instruments, or if there's something more, you know, more geared toward their end markets. But I just you brought up Texas Instruments, and I think they're good to follow from that aspect.
Yeah, and GM also had came out with I think it was GM, and yeah, it was GM, and th- they cited a $1.1 billion hit on cost increases from tariffs. Um, I saw an article yesterday. The biggest U.S. grid sets their capacity price at a record yesterday, which means electricity prices are skyrocketing all over the place. And that's to your point on inflation. We're going to get that. I think we're definitely going to get that. You're seeing it everywhere. Somehow we're not seeing it in the CPI yet. I think it's a little bit too early. But yeah, record high uh, electricity prices. So that's gonna seep into the monthly bill, right? And a lot of that is probably AI driven and data center driven. That demand is only going to go up, so we're going to get higher and higher prices in that regard, and we're going to see that in the inflation print. Energy yesterday was like the worst commodity out there, actually, and down again today. Crude oil at 65. I'm actually trying to buy a little bit of it here, and starting to look at natural gas as well. Energy has been lagging other commodities, but where it's lagging, like you look at copper up 3%, and a lot of people have been thinking that okay, U.S. copper is going to probably drop because um, Trump is going to taco on the tariff. As soon as he announced the 50% tariff rate on copper, U.S. copper jumps, European copper falls as people are trying to secure inventories domestically. And so a lot of people are looking at this spread and they're like, okay, well, copper's going to come down. He's going to taco. But copper's not been coming down. I mean, it's up another 3% today. Metals are strong. So where like energy has been weak maybe over the last few days, other other areas of commodities are coming in. And one stock that I'm looking at today for a potential buy is Southern Copper, SCCO. A lot of people look at FCX. I look at FCX too as a proxy, but I like Southern Copper as well. And just technically, I think it's at a better spot for a buy. It's like sitting right there on a bunch of nice technical levels at support. So I'm looking at Southern Copper. But yeah, so like where one commodity falls off, the other ones are taking over. Electricity prices are up, and this earnings season is going to be interesting to see um, how companies are dealing with tariffs. We had already one earnings season, the last one, where some of the tariffs were hitting and affecting them. And what we learned was that a bunch of companies are eating the cost. So the question is going to be: are they going to be eating the cost this time around?
Yeah, I think that's going to be a big question is the outlooks for these earnings as they roll in. Especially for companies in the first quarter after the first quarter reporting season that refuse to give guidance. If they're claiming uncertainty, refusing to give guidance if they change that at all. One big thing that I've noticed, and I don't know if I can share my screen on here. I want to try really quick. So, just one thing to keep an eye on with earnings season is what the Mag 7's doing versus the rest of the market. So, this is quarterly year over year earnings growth. The blue bars are Mag 7. So, this is last year. So, this is Q4 2024. And this projects out to the first quarter of 2026. So, Mag 7, again, these blue bars, you can see are the dominant drivers of earnings growth in the S&P 500. And meanwhile, the other 493 names, or these green bars, have lagged behind. But look at how, so we're right here now. So look at how this trend is starting to shift. If you want to see, earnings growth for the S&P persist and, continue to justify these levels, these valuation levels that the index is at, the other 493 have to take off. That's what this is showing. This is what analysts expect. They expect that green bar to start picking up because you can see how much this blue bar starts to trail off in the quarters ahead. So that just shows you that the earnings growth, kind of the contribution that's coming from the Mag 7, is really set to tail off this quarter and continue. Meanwhile, you need the other 493 to pick up there. So, I think that's one thing to really pay attention to, is
And
especially.
it's why like the market has been so myopic about like a lot of people lament why is the market so myopic about these seven companies, and you just showed it. I mean, they're look at the earnings difference: seven companies versus everybody else. So the market is always going to chase growth. They've been chasing growth. It's been in a myopic way. They've been focused on one area, which is the Mag 7s and AI, but I think they're kind of justified in that, right? If just by the chart that you're showing. Now it's kind of different. Now the expectations, as you said, are changing. They're expecting more from the rest of the 493.
Yeah, so that'll be, the attention's still going to be square on Mag 7 during season as it has been for the last several years. But you can see as those numbers start to shift, you really have to see if the rest of the market, the other 493, can kind of pick up the baton there, and continue to drive.
Speaking of Mag 7, we get Tesla earnings tonight. Any insight there? Do you follow Tesla that closely?
I don't follow them closely in terms of their what's happening with their end markets. I obviously follow the stock price. If there's anything that you can trade there. One thing I would watch with Tesla is that how the stock's been coiling really tight here over the last, really since it's about mid-May. Actually, if this works, I'll bring up the chart again really quick because I think it's just way easier this way. Um, so here's a chart we've shown in Larry's e-letter before, and this is kind of the range I'm talking about. So, this is about the end of May. Stock peaks out around 360, 365, and the coiling in
All
this
the
range
dips
just
were
getting
on the
tighter and
news.
tighter.
Was
What's
that
that?
big dip? Was that big dip there? Was that on Musk leaving the White House? I think that was it.
I don't know if that was a specific point, but yeah, I mean, pick any number of of Musk-driven headlines to explain the whipsaws on this chart a little bit. Um, but like I don't really, I'm not going to pick a direction on Tesla. I think you can just watch and see for this range to break, and what happens there. So I would wait on Tesla. I don't know if you have any thoughts on that one.
The only thought I have on that one is what Larry just texted me to make sure I tell you that there's a 40-point straddle in the S&P 500 for tomorrow on
Okay.
Tesla earnings, 2 times bigger than what we have today. So Larry wanted to make sure that we cover that. And what that means is, look, the market today, the straddle is a 20 yet again, another day of 20. So I don't know. Today looks like another, nothing day. The market is up, but tomorrow the market is set to go up or down 40 points. Now, a lot of that is going to happen like right after 4 o'clock, right? So it's pricing in 40 points. It's not like right now the straddle 0 DTs 20 points, but it's 8:45 a.m. So you get another 10 hours. So within 10 hours, option market is saying 20 points up or down. By 4 p.m. tomorrow, it's 40 points. So I don't know. It's a little bit
Well,
higher, right? They're expecting
yeah.
some movement on.
I'll say that could be the market reaction to Tesla and Google tonight. That.
I mean, what do you think it's going to be? I don't, I don't know uh, I don't have a bet on Tesla for tomorrow. Um, I don't know whether I can't tell whether it's overvalued or not. That's a tough one. Tesla's a tough one to get a fundamental feel for, because I don't think it trades on any kind of back of the baseball card metric. I don't think it ever has. There's some companies that more or less do that, uh, but I think Tesla's a little bit different. So I can't. I don't have a feel for
Trade
what the
trade the
earnings
hype.
like. But what I will tell you, there have been rumblings about, Tesla took out has been moving some of their Bitcoin positions, first time in a long time. I don't know what they're doing. Who knows? Maybe they'll come out tomorrow and say we're now going to become a Bitcoin treasury company. I don't know. That would be
Well,
that.
I saw just again the headlines that Musk is racing to raise funds for his XAI initiative. Like maybe he's going to take some of the gains on that Bitcoin position to help fuel some of the AI investments he needs for that.
Oh man, that could be it too. That could be it too. But I don't know. Do you think it's going to drop? I wouldn't be surprised if the market has another big update tomorrow. Would not be surprised.
Yeah, yeah, we've done some research recently on Tesla, and just there's something in the market. You might be familiar with this. I know you follow the quant space pretty heavily, but just the presence of short term reversals. So over longer periods, momentum persists. A popular quant factor is to look at 52-week momentum. Well, there's a popular momentum factor that takes 52-week returns and subtracts out 1 month returns. So it's basically it wants to give you credit if you've done well over the last year, but penalize you if you've done really well over the past month, because over the short term, stock prices mean reverse, so they want to go the other way. So that's short term reversal, and we did some work on this with the Mag 7, and Tesla demonstrates some pretty heavy reversal features, especially when you get a really outsized 1 day move. So what that means is if you see a really large abnormal 1 day gain for Tesla, be on the lookout for a big give back the next day, a decline, and then vice versa. If Tesla sees a really big 1 day decline, watch out for a reversal higher the next day. So I think if you're looking to trade that really short term, those are some things you could look for with Tesla. Besides, maybe a move out of that range we were talking about a minute ago.
I think that's a good principle to keep in mind, not just for the Mag 7. I think it's a good trading principle in general. you don't get FOMO. You see prices higher doesn't mean you need to chase them. Um, you know what's a good way to? I think a lot of traders fall susceptible to FOMO, even though they say they don't. But like for you people at home, like if it, we all get that urge to, you see a price, you see something break out, you missed it, you wanted to be in it, you were indecisive, and you missed the move. It happens. We all go through it, right? Best way to handle that I've learned is like put a dollar on it. Don't put like don't go all in on a move like that when you missed it. Put like $1 on it just to like quiet down the inner demon a little bit, and then you can make a more rational decision. And same thing on the downside. Like don't sell the whole. You know. Now it sometimes rules are meant to be broken, but most of the time I think that's a good trading principle in general when you describe it.
Yeah, no, I think that makes sense, and it kind of goes along the lines of something that I do that I look at with. It relates back to how I position size. So maybe it's a good time to talk about position sizing. I don't think we've mentioned that before, but what I like to do on my trades is I look at I look at where my stop loss level would be. So obviously if I'm chasing a breakout and we have a big gap above, and I want to put my stop just below the gap area, there might be quite some distance for my stop to get triggered, and so that would leave me with a lot of downside risk. Well, I would position size so that if my stop is hit, I'm not risking any more than, historically I look at like a half a percent to 1% of my account. So, let's say if I'm trading a $500,000 account, 1% of that would be $5,000. So I don't want to lose any more than $5,000 on one trade. So I would position size so that if my stop were hit, my loss would not exceed $5,000. So that's a way to like kind of vary your position size, keeping in mind how much account equity you want to put at risk on any one particular trade.
Yeah, I think that's sound. I think that's totally sound. 1% of your account. That's uh,
You can
you
survive a
know,
lot of knife cuts that way.
yeah, yeah. So, what are you looking at today?
I'm definitely going to be watching, Tesla around, that coiling that we talked about. Google's the other big one coming out tonight, and Google looks a little extended here. I don't know if you've got a chart of Google, but we're getting stretched pretty far above the 50-day moving average on Google. At the same time, we're
What's the
closing
ticker
in
there?
on what's
What's that
that?
ticker? What's that
Yeah,
ticker?
uh, I'm looking at Goog, Goog for Alphabet, but you're getting the prior high starting to come into play. Stocks getting a little extended, so I would look to maybe fade a move off a test of that prior high. I can bring the chart up.
I'm just
So
looking at my Tesla options for August 15th. They're
here, here's a here's a quick look at Google or Alphabet. Again, they're reporting after the close. So the blue line, that's the 50-day. This is what I just mentioned. The price it's getting a little extended off the 50-day. So look for maybe some mean reversion there. Another level to watch as that's coming into play. We're at 192 or so on the share price. You're getting into this area back here, kind of the prior all-time highs are around 200. So, if we start to, I don't know what the stock's going to do today, but if we start to extend up into that range with how stretched we are, I would look to maybe play, a reversal lower in that name.
yeah, a lot of people when regarding Alphabet think that it's like one of those stocks that nobody knows yet how good they are, relative to all the other mag stocks. It feels like they're always lagging, but it also feels like there's always reason to think that they're going to take off versus everybody else. Um, And I don't know when that's actually going to happen, but they're definitely working on exciting things. And I think they're leading right in quantum computing versus the others in many regards. So I'm rooting for Google. So are you long or shorted? I didn't
I
get
have
that.
no position right now. No position in Google.
Okay. Yeah. When is that outperformance in Alphabet going to come? Everybody keeps talking about it, but um, not sure. Options on Tesla actually kind of look, I don't know, kind of cheap to me in both directions for August. So let's see. Maybe there's something to do there. I like when options get kind of cheap. You can really make hay if you get the direction right. So market today looks um, very strong. It came. It's now. I mean, we're right. We're going to open at an all-time high. I think pretty much. So this Japanese news is pretty good. The market seems to like it. I know you don't think it's that great, but the market is rallying off this. And you mentioned the inflation part of it for Japan. Yeah, rates last night in JGBs were up pretty good. And at some point in the US, they were up as well. People are starting to talk about Japanese rates a lot recently. They continue to go up. The Japanese bonds have been absolutely killed lately in a deep downtrend here. I mean, when is that gonna? When you think we're gonna have a round two uh, on the Japanese carry trade? I mean, or is that kind of in the rearview mirror? I just feel like nobody, like the market doesn't care about like whatever they cared about a year ago is no longer the case now. Like you have rates in Japan like even higher than they were, and nobody seems to care. At some point, all that is going to probably be revisited. Um, but look, August 1st is coming up, and we're I'm still waiting for that big India deal. Well, like, where is that? So Japan was definitely a big one. We're going to get a lot of news coming out over the next week on tariffs, and I think the right way to play this is anticipate the headline. We're going to get headlines over the next week on tariffs, and the mo has been let the algo crush the market for like an hour and then just buy it right back up. And I think that's kind of the strategy I'm going to be going with over the next week. In general, I just think the market looks like it wants to rally all throughout the summer, into the end of the summer when we get uh, a situation with the Fed. I mean, how is the Fed going to cut rates with everything that's going on right now? I don't see it.
Yeah,
But
feels like they're trying to push the whole, the Fed thing out of the spotlight. I know Trump's made comments, Bessent's made comments. It's kind of like they're relenting toward just letting Powell finish out his term. There's not much there. That's at least the headlines over the last couple of days have been, throwing some water on that situation and just pushing it off to the side because I don't think they're going to get what they want, so the attention's turning somewhere else. And yeah, I think the market at some point, the market's already starting to reprice rate cuts. September looked like it was a lock there for a while. In September, last time I looked, was a coin flip for a rate cut at the Fed's meeting in September. So, it's basically a 50-50 bet right now from what the markets are pricing. And I think if you get a couple more of these inflation reports starting to accelerate, then you really start to call into question if you get any rate cuts this year.
when are we refining our houses finally? Like, when is that going to
I,
happen?
I'm locked in. I bought my house. That was 2015, and I refinanced once.
You got like zero. You got negative interest rates.
I can never move, Eric. I can never move.
Yeah,
I'm here
they're
I'm here
paying you.
forever.
they're paying you to
Yeah,
send that.
it's essentially, yeah, with inflation where it's at, I guess so.
They're paying you. So just looking ahead into 2026, like real estate, I feel like is in such a standstill, like in quicksand, because like the buyers can't meet the buyers don't want to do anything because the mortgage rates are high, and the sellers don't want to sell. I feel like it's stuck. But looking ahead into 2026, I mean, Powell's not going to be there. At some point, Trump is going to get his whoever he wants in there, and that person is going to be of the philosophy that rates need to go lower. Ray Dalio had an interesting article yesterday. I didn't get a chance to read it, but just from the headline, I kind of, because I read his stuff a lot, I kind of figured what he's going to say. And he was like, the real argument, he framed the Powell Trump thing as kind of like an argument about the value of money and what that means. And he brought in the classic debt cycle stuff that he loves to bring in. But
Yeah,
look, I mean, it's all true. At the end of a cycle, especially a credit cycle, a long one like the U.S. is in, we have a ton of debt, and high interest rates are a big burden. I think Trump is trying to unravel a lot of that and fix a lot of that by bringing in revenue from tariffs, get that deficit down. But yeah, at some point, you want those rates down. That's the easiest solution to deal with high debt. And that's what he wants. He wants lower rates to deal with the high debt problem.
yeah. I
Which
mean, well, there's two issues with that. Okay, so you the Fed controls rates on the short end, and they don't control the long end. Like maybe you can control the long end a little bit through QE, or we talked about, I don't know if you remember Operation Twist. I can't remember what year that was, but selling stuff on bonds on the short end to buy the long end to try to flatten the yield curve. So there's maybe some things they can do, but they don't control the long end like they do the short end. So that, you talk about unjamming the housing market. I mean, mortgage rates follow the 10-year treasury yield, right? They don't follow what the Fed's doing. And so there's this misconception, I think, that just
yeah,
because,
there's a disconnect in the
yeah, I mean,
in
so the Fed, just because the Fed cut, you read a headline, Fed cuts interest rates by 0.5%, that doesn't mean the entire yield curve from short term all the way out to 30 years all of a sudden shifts down 0.5%. It doesn't work like that. It sometimes it does follow along, but sometimes it doesn't. And when it doesn't, that's when you see a steepening yield curve. Because the Fed, when we talk about steepening yield curve, the Fed's lowering rates on the short end, but the long end's not going anywhere, and so the difference between the two gets larger. That's steepening the yield curve. So
yeah, but if they cut 25 basis points or 50 basis points, rates are going to fall all across the yield curve. I know what you're saying though. They move on different things, but part of the long end of the curve is dependent on the actual overnight rate. Some of it.
some of it, but again, if the yield curve's steepening, that means long term rates are not falling at the same clip as short term rates.
Right, and
So
that the Fed needs to be careful of that. I think that's part of the reason why they've been kind of hesitant to cut rates because they see that spread. They don't want and that spread that you're talking about, that's the real rate pretty much. And they don't want that real rate. They don't want the real rate higher and higher and higher. That's a chokehold. They don't want that. So they may not be able to do what they say they want to do at the end of the year. But looking ahead into 2026, I think Trump is going to get one of his guys in there, and they are going to cut rates. And maybe next year is going to be a pretty good year for real estate. Finally, just looking ahead, something to look forward to potentially. Well, it's 9:05. We got the open coming up. The market is up about 22 points here in the pre-open. Has shrugged off a market-moving Texas Instruments earnings report. I say that tongue in cheek, obviously. We got Tesla earnings tonight. You see a big move from 9:30 to 4 o'clock today? I don't. I kind of see. I see
Yeah.
another opportunity.
I see it as just holding steady. I see nothing until you start to see some of these Mag 7 earnings start to roll in.
Exactly.
Yeah.
Exactly. Yep. That's what I'm thinking. So I'll let you have the last word. Let us know what you think about today's market and how your products with Larry are positioned going into the day, and we will wrap.
Yeah. So I don't want to jinx anything. We've had a great run with spread trades. Did two yesterday, kept full premium on both spreads. So obviously going to try to
How
keep
much did
that
you guys
going.
get on spreads?
What's that?
How much did you guys get on those spreads?
Not much. It was under $3 on both combined. So
Yeah,
still,
well, premiums are down.
yeah. If
You
you're
know,
if you're trying to control risk by going kind of far away from where the market's currently at, you're not getting anything. So that's the trade off. That's the delicate balancing act is, how far you want to go away from where the market's currently trading at versus what kind of premium you want to bring in. That's I guess the art and the science that Larry brings to it.
listen, $3, and what was the spread? Was a 20-point spread in both directions?
It was close to 20 in both directions. Yeah. Yeah,
Yeah.
I think we actually ended up having, because we didn't do it at the same time. We ended up having about a 50-point range that to work with, so that was pretty good for that kind of low ball day, so to speak.
And directionally, where are you guys at? You guys got any positions on the old
Direct
opportunistic?
overall direction is still mostly short on via put options. Yeah.
All right, all right. Anything with any new OFX positions?
No, still holding a short euro position. So long the dollar by being short the euro. Yeah, but we've had
Yeah,
that.
there's
That one's
not
just been.
much market here at this point. There's just and I don't know if there's going to be anything to do over the next couple of weeks. In one way, I kind of like the way the summer is going in terms of the market. It's just nice and relaxed. There's no fireworks.
You take it
Everybody's
easy.
able. Yeah, it's the worst thing. You go on, you book a vacation, you go on vacation, and then the market is like dropping 100 points.
Well, if you
And
if you look at Eric, if you look at VIX seasonality, this is where it turns. So it falls into July and it rises over the next 3 months. So that's what it did last year. We'll see if this year's a repeat at all. But this would be the low point for volatility.
yeah, and vol's pretty low. I mean, we're sitting here trying to pick $1 on a $20 spread in SPX. That's
Yep.
that is slim pickings. Okay, well, we'll wrap it here. Thanks for joining, Clint. Pleasure as always. Good luck, everybody, today. We'll see you tomorrow morning.
Yeah.